Hey, welcome to Classic Value Investors and Microcap Explosions. This is Mariusz Konieczny. I want to talk about the topic of real estate investing in this video. And it's because I started my career, professional career, actually in real estate. As a real estate appraiser, as a real estate broker, and then I left the industry to start Classic Value Investors in 2009. But I always pay attention to the industry, and I always, in the back of my mind, think about how when I accumulate a certain amount of money through stock market investing, I would like to take a portion of it and allocate it to real estate. And I talked in previous videos about how I like mobile home parks, which I believe is one of the best commercial real estate investing niche. But there are obviously apartments, office, retail, industrial, and one time I made a video about various real estate products. But as now my portfolio gets large enough, I think about it more and more, and I look at like sites like LoopNet, or think about the some of the things that I want to buy, because wouldn't it be great to have either an apartment or whatever, or a mobile home park where you get monthly checks from your renters and you can use it to pay your bills and whatever. So, but every time I look at real estate and I compare it to other opportunities that I have, I get disappointed. And before I go any further with this video, just watch the following clip from Warren Buffett and Charlie Munger explaining why they don't invest in real estate.
I'm Bob Klein from Los Angeles. I wonder if you could give us a glimpse into your investment process, the way you approach looking at a particular industry. And I wonder if you could use real estate as an example. I know real estate hasn't been a huge part of Berkshire's portfolio over the years, and I wonder if that's because you view real estate as a commodity business, or if maybe the cash flows from real estate tend to be more predictable than perhaps from some other industries, and thus it tends to be less likely to be mispriced, and therefore less likely to find terrific bargains in real estate. So,
go ahead.
So, just wondering if we could, if we were watching a discussion between you and Charlie, hashing out the merits of real estate, how it would go.
Well, it would go like all our other conversations. He would say no for about 15 minutes, and I would gauge by the degree to which the motion he put into his nose whether he really liked the deal or not. But we both had a fair amount of experience in real estate, and Charlie made his early money in real estate. The second point is the more important point. Real estate is not a commodity, but I think it tends to be more accurately priced, particularly developed real estate, more accurately priced most of the time. Now, during the RTC period, when you had huge amounts of transactions and you had an owner that didn't want to be an owner in a very big way, and they didn't know what the hell they owned and all of that sort of thing. I mean, you had a lot of mispricing then, and I know a few people in this room that made a lot of money off of that. But under most conditions, it's hard to find real estate that's really mispriced. I mean, when I look at the transactions that REITs engage in currently, and you get a lot of information on that sort of thing, you know, they're very similar, but it's a competitive world, and you know, they all know about what a Class A office building in Chicago or wherever it may be is going to produce. So at least they may all be wrong, as it turns out, because of some unusual events, but it's hard to argue with the current conventional wisdom most of the time in the real estate world. But occasionally there have been some, there could be big opportunities in the field, but if they exist, it will certainly be because there'll be a lot of chaos in real estate financing for one reason or another. We've done some real estate financing, and you have to have the money shut off to quite a degree, probably to get any big mispricing across the board.
So actually, I never really heard this clip before until today, and I feel exactly the same way, because you see, I like the idea of real estate a lot, and actually there are some people on Microcap Explosions who are in real estate, and especially one particular person that is very, very big in real estate, and he bought a big portion of his real estate holdings in 2009, but that was during the crisis. And the problem that I have with being comfortable with going into real estate is the fact that when I compare it to other investments, the returns are just not good enough. I'm spoiled because I can find 2x, 4x, 10x investment opportunities where they're not available to me in real estate. Because you see, people that are in real estate, they treat it as a business, so they look at the fundamentals, and they are not idiots, they're not stupid to sell you something that's worth $1 million, to sell it to you for 200,000 or 100,000. Okay, the real estate industry is very efficiently priced, and actually you can argue that it's overpriced because of the money that is being thrown at it by cheap money by the banks. So if there was a situation where there would be like a financial chaos, where as Buffett said, as the money would be shut off and not available for real estate purchases, then I believe that the real estate pricing would come down to levels where it would be attractive for someone like me. But in an environment where banks are very happy to lend on real estate, and when interest rates are so low, then the cap rates that people pay for commercial real estate is very, very low. And what do I mean by a cap rate? Cap rate is when you take your net income from the property that it generates and you divide it by the price that you pay. So it doesn't take into account leverage, but let's say you have an apartment building that generates $100,000 of net income per year. And because money is so cheap, because banks are willing to lend so easily on real estate, you cannot get a quality apartment for $1 million. In other words, $100,000 divided by $1 million, that would be a 10% return. There's no way you can get it. You have to most likely pay 5%, which means that 5 or 6%, but let's do 5% for simplicity. So if it generates $100,000 of net income per year, you would have to pay $2 million for an apartment like this. And generating 5% return is just simply not good enough for someone like me. And that's why what people do in real estate is they borrow and they lever up so that they can capture the spread between the cap rate that the property generates and the interest rate that they pay to the bank. So for example, and I don't know what the rates are, but let's say the cap rate is 5, right? And they can get their loan at 4%. Then they make money on the spread. And again, I don't know where the rates are, but I'm just saying to you is that I always get disappointed when I look at a property, and even if it offers 10% return, competing against all the other opportunities that I look at, it just never gets me excited. Why would I want to only generate 7 or 10% and maybe a little bit more with leverage when I can get 3, 4, 5 bagger somewhere else at a very low risk? You see, in real estate, what's interesting is that in the financial world or financial advising, real estate is considered as an asset class. No financial advisor will tell you, oh, don't buy this $500,000 8-unit apartment building because it's too risky. No, they would never say that. But if this particular apartment or a group of apartments were grouped together and put it into an entity that would be trading on the public market, in OTC markets, then those same advisors would tell you, don't touch it because it's a micro cap. It's trading on OTC and it's a toxic exchange. You see, when it comes to stocks, you have the entire financial world telling you to stay away from areas that actually can offer huge financial rewards, and they do so simply because of the size of these companies in terms of market caps or the places that they're trading. And the other day I just saw that someone posted on Twitter saying that 99% of companies on OTC are trash. And I don't know if I agree with this, but let's say it's true. 99% of them are trash. And this particular person focuses on the 1%. So because of that stigma and because of the fact that a lot of them are trash, the financial industry tells you and tells others to stay away and only go into places where the returns are not that fantastic because everybody else is looking at them. And because I am willing to go into these exchanges that are not approved by the traditional money managers, I'm able to find opportunities that will any day beat any real estate opportunity that I can find out there. So even though I would really love to own an apartment building or a mobile home park, I don't know if it will ever happen, because every time I look at my investment opportunities and I compare them, just real estate deals can never compete. In conclusion, these are just my thoughts about what I'm thinking about these days, and let me know your thoughts. Let me know your experiences. If you're thinking the same way, or if you think that there are real estate opportunities out there that offer better returns that you can get on some of the opportunities in the small cap space.